Today, let's dive into one of the most interesting stories in the global electric vehicle industry, Tesla's sales in China. China isn't just a big car market. It's actually the largest electric vehicle market in the world. Millions of EVs are sold there every year, and the competition is fierce. For Tesla, China has become both a golden opportunity and a massive challenge. Back in 2019, Tesla made a bold move by opening its Gigafactory in Shanghai. This was historic because it was the first fully foreign-owned car plant in China. That factory has completely transformed Tesla's global operations. Why? Because it doesn't just serve Chinese buyers. It also produces cars that get shipped to other markets across Asia and even Europe. In fact, the Shanghai factory has often been described as Tesla's most productive plant worldwide. Now let's talk numbers. In recent years, Tesla's sales in China have accounted for over a quarter of its total global deliveries. That means out of every 4 Teslas sold worldwide, at least one is bought in China. The Model 3 and Model Y are the stars of the show. The Model Y especially has been a bestseller, often ranking among the top EVs sold in the entire country. Chinese consumers love it for its mix of performance, technology, and brand image. But of course, there's another side to the story. China is also home to Tesla's biggest rivals. Domestic companies like BYD, NIO, Xpeng, and Li Auto are not only strong, but they're growing at an incredible pace. BYD, for example, has already overtaken Tesla globally in terms of total EV sales. These companies have the advantage of strong government backing, aggressive pricing, and deep knowledge of local consumer habits. Because of this competition, Tesla has had to make some strategic adjustments. Price cuts are one of the biggest tools it has used. Several times in the past couple of years, Tesla has lowered the prices of the Model 3 and Model Y in China. While this helped boost sales temporarily, it also sparked what some analysts call a price war in the Chinese EV industry. Other automakers responded with their own discounts, and the whole market became even more competitive. Despite these pressures, Tesla still maintains a powerful reputation in China. Many consumers see it as a premium, high-tech brand. Features like autopilot, over-the-air software updates, and long driving range continue to attract customers who are looking for cutting-edge technology. Another key strength is Tesla's Shanghai Gigafactory itself. Producing cars locally allows Tesla to cut costs, avoid heavy import taxes, and deliver vehicles much faster. It's not just a sales center, it's a strategic base for the company's expansion in Asia. Looking forward, Tesla's success in China will depend on more than just selling cars. The company will need to continue innovating in areas like battery technology, autonomous driving, and energy solutions. It will also need to balance its global identity with local consumer demands, because Chinese buyers are now spoiled for choice when it comes to EVs. So, what's the bottom line? Tesla's sales in China tell a fascinating story of growth and pressure. On one hand, China gives Tesla access to a massive, rapidly expanding EV market. On the other hand, it's also where Tesla faces its toughest rivals, many of whom are growing just as fast. How Tesla performs in China over the next few years could very well determine its position as a global EV leader. And that's why, when we talk about the future of Tesla, we can't just look at California or Berlin. We always have to look closely at Shanghai and at what's happening in the streets and showrooms of China.